Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update, and this is for Monday, the 26th of June, 2017, and I'm really late with everything. I, by accident, erased everything in my graphs. I mean, everything, without a possibility of recovery due to how something was set up. My fault. What can I tell you? But let's go to the charts for the grains and get a feel for what's going on. You still have a weekly chart where you've gone from $9.80 down to $9. You're getting a minor bounce so far of about 6 3/4 cents. Big deal. The market is still not looking that good, although in the afternoon the crop condition reports came out and they were worse than people think. So you might get a bid tonight off of this. But you still have that big reversal down from last week, and you've got to pay attention to that because last week's highs, and that high specifically was 947.5. That's going to be your issue that you're going to be dealing with going forward for a bit. When you look at an area chart of just closes, you've gone from 51 down to 911, getting a small bounce. Okay, nothing impressive there as I see it. It's still a market that's gone in one swoop all that distance, and that's fairly bearish. You're still in a down thrust when you just look at a daily chart where you've gone from high to low of 58 1/4 down to 907 over past 2 weeks roughly. When you look at the swing line study, you can see how you've now got a higher high and a lower low. Nothing bullish about that at all. Therefore, the pattern of that part is neutral. You're still over the 18-day average of closes or under it. You're under it. Therefore, your bias is down. That number's 33. So you've got a market with no trend. The bias is down. The Bollinger Bands were recently hit, the market turned away from them, and the slow stochastic is in oversold condition. So when I put that all together, what I come up with is a market that's really hit a downside target. Maybe it'll get a bounce here, resistance back up at 933. When we come to the August meal chart on the daily bar chart, you've got a pattern of lower highs and lower lows. That is bearish. The market is in oversold territory. You've got readings of 12.3 and 18.28. That is still oversold, not embedded. Therefore, on rallies, you might work off that oversold condition. Converse, let's assume that the market spends a bit of time here under that 20 reading. The reading on Friday was 21.24. It would take a minimum through Wednesday's close to embed. Therefore, just an oversold condition. In the soybean oil market, oversold, higher high, lower low pattern. Not much I see to do with that either. In the corn market, the trend still remains well entrenched to the bear side. Lower highs, lower lows. You got under the lower Bollinger Band on Friday. You closed back over it today, but there's nothing there that says anything but still oversold. Slow stochastics in wheat have turned down with the pattern of lower highs and lower lows. Still not looking all that favorable to me. Support comes in around 485, but if the market has made a major bottom, which a lot of us think that that could be going on, then a challenge of this 18-day average very much in the cards, could go either side of that, but overall it should hold. In the sugar market, you've got momentum pointing down. It has stayed embedded. You have an outside day down today. That means you took out the highs and lows of Friday. You closed down. Now, you got as low as 1282. You closed right on the lower Bollinger Band, but there's nothing at all bullish on this chart, still looking pretty sick. When you come to the coffee market, today's high was 126.60. It did not take out the high right here. Sometimes on the graph it looks like it, just the way that the axes go. However, you lost your embedded reading. I was looking for the market to come up to the 18-day average. Today's high was 126.60. You missed it by one tick. I mean, come on, that's pretty darn close as I see it. I'm impressed with the action in terms of just a bounce in a bear market, not a trend change. And in the cocoa market, you still have a pattern of lower highs, lower lows, a market that is in oversold territory and hitting the lower Bollinger Band. Nothing new that I see there whatsoever. We then get to the cotton market, which still has this embedded reading. In other words, both the K and D readings are both under 20. However, you do have an outside day up. So if you're going to resume the downtrend, and it's still in it, but if you're going to resume the momentum of it, you've got to take out today's lows right away. If you don't, you could get more of a short covering rally. And on that rally, what you don't want to see is the slow stochastics get over 20. When we come to the cattle market, in the cattle market, you've just turned the slow stochastic up. That means that if prices want to rally from here, look for the 18-day average of closes to be hit. If they are hit, that would neutralize what? Well, I don't know too much there. Let me explain what I mean. The fact that you've already got the swing line up and you're under the 18-day average, those two elements are fighting each other. There's no trend. The momentum, though, is turned up from being embedded. That often leads to a challenge of the 18-day average of closes. Feeder cattle's already doing that when you've lost the embedded reading, higher highs, higher lows. Watch out here, you can get up to that 18-day average right away, but there's nothing bullish yet. Why? Because both the live and the feeder cattle have closed under the 18-day average of closes. Same in the hog market. Even though it has the pattern of higher lows and higher highs, it's under the 18-day average. That keeps the bias down, but the swing line's up. Nothing to do with that. And momentum continues to point down. So as I look at everything on the chart, I see a lot of markets that are typical of summertime, churning, if you will, back and forth, trying to figure out what they do at this point in time. And that brings me to the end of June, as we're getting here, and the end of my discount on my charting course. If you'd like to learn how to work slow stochastics, Bollinger Bands the way I do it, window envelopes, which you don't even see here, my other techniques of inside days, outside days, the different averages that I use, and you're only seeing part of them. You're not seeing all the averages and how I put it together. Well, I've put together this into a charting course. So let me explain how that works. I'm told now, about 6 hours of videos in my course. 54 chapters. Each chapter starts with a PowerPoint primarily to give you an idea of how an indicator works. Then I take you to a live chart. I often cover the name of the chart. If you can see what I do, you do the same thing. The charting software, which is a $99 value on its own per month, is thrown in with the charting course so that you get that. And it does have all the data that I go back to in the course. Remember, I did videos, so if I was shooting charts at that point, they're going to be older in time, and that's how that goes. But the real important thing is that in the mornings, I also do a subscriber video. So now what I do there is I bring you up to date on actual charts, and you can always hit pause on the recordings and everything. You bring yours up, you see what I'm doing right now, where I've got my lines, what I'm saying. You do the same thing. It's rote, if you will. Speaking of rote, what about the word writing? I write updates in the evening, in the morning. They look a bit like this: buy here, sell there. I'll live and die by the trade recommendation. This is what the video looks like in the morning. So how do you get all this? Well, normally, by the way, it started off in December at $69.95. The retail price is now $99.95. And here's a trade I'll guarantee. I'm raising the price again. The course, I did courses like this over the years. It's probably my 5th, 6th, 7th reiteration of different ways that I do all this. And what I did is this course used to sell for hundreds of dollars, but I can put it on the internet, no shipping, no handling. Now it's $99.95, but if you use the word IRA20, IRA20, put it in the coupon area, $79.95, and I tell you, this is going to end at the end of June. So the price is going up later, and you won't get the discount. You can click up here if you're watching me on YouTube. Underneath us on many sites, if you want more information, you can click there. You can always call us at 866-973-2077. And other way to do it is go to our website, www.iraepstein.com, go under the word education. You will, from there, be able to read all about it and sign up for it. Remember the IRA 20? I'll see you tomorrow.